It started with a bang, a seismic announcement that promised to reshape the future of technology as we know it. Headlines blazed across the globe, heralding a monumental alliance between two titans of the artificial intelligence age. On one side, Nvidia, the undisputed king of AI chips, the company building the very foundations of the AI revolution. Their plan was breathtaking in its ambition, to invest up to $100 billion in OpenAI. And on the other, OpenAI, the pioneering research lab behind the cultural phenomenon of ChatGPT, pushing the boundaries of what AI could achieve. This wasn't just a partnership, it was a symbol of the global AI arms race, a fusion of the world's best hardware and software minds. Then, an unnerving silence. The thunderous announcement faded into a whisper. By January 2026, the entire narrative had flipped. The initial euphoria gave way to skepticism and concern. Major outlets began reporting the unthinkable. The mega deal had stalled. A once certain handshake, the very symbol of this historic pact, was now frozen mid-air. Shock waves of uncertainty rolled through the tech world and financial markets. What could possibly derail a deal of this magnitude? A partnership that seemed so inevitable. To find the answer, it's time to lean in and look under the hood of this technological behemoth. This abrupt U-turn raises a cascade of serious questions that strike at the heart of the AI industry. Questions about staggering cost, about intensifying competition, and ultimately about control over the most powerful technology ever created. It forces us to confront the brutal, often hidden economics of building next-generation artificial intelligence. This isn't just one deal gone sideways. It's a potential bellwether for the future of AI itself. So what really happened behind the closed doors of Nvidia and OpenAI? What calculations led Nvidia's visionary CEO, Jensen Huang, to suddenly tap the brakes on the biggest bet in tech history? To truly understand the fracture, we have to go back to the very beginning and follow the money. On the surface, the original plan was breathtakingly elegant. It wasn't just a transaction, it was a strategic masterstroke, a vision for a self-reinforcing ecosystem designed to solve critical problems for both companies at once. The core loop was simple. Nvidia invests in OpenAI. OpenAI then uses that capital to buy Nvidia's advanced systems. Money in, hardware out. A perfect cycle of mutual acceleration. For OpenAI, it meant securing a guaranteed supply of the world's most coveted resource. They would lock in massive priority orders for the most advanced hardware on the planet. This wasn't just about getting state-of-the-art silicon, it was about deploying it at frontier scale. We're not talking about a few thousand GPUs. The vision was for entire campuses of compute, vast digital factories dedicated to building intelligence. This created the perfect circle. Nvidia's investment directly creates guaranteed demand for its own products. That demand, in turn, drives Nvidia's meteoric growth and market valuation. And in the process, it secures OpenAI as a flagship customer, a living testament to their technology's power. Together, they wouldn't just participate in the future, they would accelerate its arrival. The sheer scale of this ambition was staggering. The plan hinted at supporting a power draw of around 10 gigawatts. To put that in perspective, that's enough electricity to power over 8 million US homes. It's roughly the peak energy usage of New York City. This wasn't a data center project. This was national-scale infrastructure. It was a power move designed to cement their joint leadership for the next decade. For its part, Nvidia's stake was structured as non-voting equity, a clever way to capture all the financial upside without any governance entanglement or operational headaches. The synergy was undeniable. Every breakthrough from OpenAI would showcase Nvidia's dominance, and Nvidia's ever-increasing strength would fuel OpenAI's next leap. It was a bold, unified vision for AI dominance, a symbiotic super deal to build the future together. Then came the fine print. Nvidia's CFO, Colette Kress, still at the letter of intent stage. That means interest, yes, commitments, no, an agreement to agree later. Terms could change or be withdrawn. This was never a done deal. Jensen denied friction, praised OpenAI, and Sam Altman. But when asked about 100B, no, nothing like that. Support? Yes, the number dialed down. Mega deals are fluid. Clarity evolves. With no definitive contract, Nvidia could adapt to new info. This was a pause, not a breakup. A measured tap on the brakes in high-stakes AI. Big ambition, tempered by discipline. So why the caution? Let's talk pressure, competition, and cost. When a deal of this magnitude was on the table, reports said the most significant doubts came from inside Nvidia itself. The sheer scale of the investment was staggering, prompting a deep internal evaluation of the risks involved. $100 billion isn't just a large check, it's a monumental, company-defining risk. For a disciplined operator like Nvidia CEO Jensen Huang, questions on long-term stability and financial discipline immediately arose. Huang reportedly critiqued OpenAI's business approach, which some analysts have described as chaos in a 500B valuation. The strategy seemed to be scale at any cost, a stark contrast to Nvidia's more measured, profitable path. Plus, the competitive landscape was heating up. It was no longer a one-horse race. Google's Gemini was gaining serious traction, with reports citing massive user growth, while Anthropic and others kept innovating at a blistering pace. Making one giant, exclusive bet on a single player in such a dynamic market? That's not just risky, it's strategically questionable. Nvidia's core strategy has always been clear. It's far better to be the indispensable arms dealer to all factions in the AI war. This caution is rooted in the brutal economics of the industry. Building and running frontier AI is insanely expensive. Analyses showed multi-billion-dollar losses at major AI labs, far outpacing their revenue. The projected burn rate is astronomical, with some estimates suggesting tens of billions will be needed just to keep the lights on as models continue to scale. Some reports even claimed OpenAI's cash could run out by mid-2027 at its current pace. A huge part of that cost is electricity, a recurring massive bill. The physical infrastructure is another bottleneck, with years-long lead times for essential grid hardware and cooling systems. According to Bain, U.S. AI data centers alone could demand nearly 100 gigawatts by 2030. To put that in perspective, that's enough to power entire cities, dedicated solely to running AI. To justify these colossal expenses, some argue that trillions in annual revenue would eventually be needed, a figure that dwarfs even today's largest and most profitable corporations. Without a clear and credible path to that level of profitability, the clock is always ticking. For a disciplined operator like Huang, the numbers just didn't add up. Caution wasn't just an option. It was the only logical choice. Even as Nvidia paused, OpenAI wasn't stranded. Microsoft remains a core ally, deeply integrated. Reports, new rounds, multiple partners. Amazon reportedly explored up to $50 billion in equity. Syndicates spread risk and broaden support. Shift from infra deal to equity bet on valuation. It also diversifies beyond a single cloud. More seats at the table, more options. Meanwhile, AI research is changing. DeepSeek V3 showed frontier results at a fraction of cost. If software is 5 to 10x more efficient, hardware needs drop. Bain. Infra spend could fall 30 to 50%. That forces hard reforecasts for decade-long bets. Still need many chips, but not cataclysmic scale. Nvidia recalculated. Pragmatism over hype. Caution and wonder, both are warranted. Jensen Huang, supportive but exacting on terms. Sam Altman, under pressure to fund the future. Satya Nadella, strategic partner, platform scale. Sundar Pichai, Google's Gemini push intensifies. Elon Musk, critic, litigant, and rival with Grok. Allies, rivals, and everything in between. New revenue paths emerge, from cloud to ads, and the ultimate dream, AGI. We're at a crossroads: power, progress, pragmatism. AI can transform medicine, creativity, and science. But costs, materials, and energy are massive. Shortages and prices ripple to consumers. The next phase, efficient, sustainable AI. Diversified funding, smart partnerships, proof of ROI. These leaders are making decade-defining calls. What's the right path forward? Tell me below.